this is CS Tejal Katariya, and today we are going to revise unit number 6, that is contingent contract and quasi contract. We'll try to revise this within max 15-20 minutes. Very simple unit. There are only two types of contract, quasi and Indian contingent contract. These notes which is there on your screen right now, you will get these notes in the description box of this video. Along with that, the unit number 5 for units notes also are there in the respective videos, so please go and check it out. These are the notes which are, I guess, so if you are at the stage where you just want to revise, either you want to just revise or you want to you have not done anything up from this particular unit, still these notes are relevant for you. At least just try to grab the keywords from this and try to write whatever you know in your exam. If you are in that bad stage also, still that's okay. We'll revise this within next max 20 minutes. So let's start with lots of energy, everyone. First with the contingent contract. So basically, what do you understand by contingent contract? Contingent contract is given under section number 31. Contingent contract is a contract where to do or not to do something. Where to do or not to do something if some event collateral to such contract does or does not happen. Now understand, to do or not to do something means what? Your contract will be kind of a marine insurance contract, like where if your ship did not arrive, you will get the insurance. So to do, not to do, that your ship is not arriving. To do, if your ship arrives, then only you will get the money. That is to do. So to do or not to do something on that basis, where the event or if some event collateral to such contract means this contract, our contract, collateral to such contract happens or did not happen, so you will get the insurance. But for this, collateral event is ship arrival, so that event is collateral to your contract. This is nothing but the contingent contract. I'll give you a lot of example on this so that you will get the clarity of contingent contract. So first understand, first example is more of a if you have studied the guarantee contract ever during your preparation time. So first I'll give you the example of guarantee contract. First example, I have already given you marine insurance or fire insurance kind of a contract. The second is guarantee contract. Guarantee contract means what? Let's take an example that Mr. X has taken a loan from Mr. Y. X has taken a loan. So here he is a lender, here he is a borrower. Okay. Now what happens is, lender and borrower, for rupees 1 lakh, he's going to pay the installments. Now what happens is, Y is not sure whether X will pay or not. So that's why X come to me and he asked me that, ma'am, please give guarantee on my behalf to Y, so that if I did not pay, you will pay the amount. Okay, so as a student, X is coming to me and saying that, ma'am, because you have a reputation in the market, or you are well known in the market, so please give guarantee to Mr. Y, and Y will trust you, and that Y will give you X 1 lakh rupees. So in this situation, understand, I am giving guarantee to Y that if Mr. X, my student, did not pay, I will pay that 1 lakh rupees. So now my contract, so event is what? Default of X. Default of X is the collateral event, and on that collateral event, our obligations are, my obligation is to pay money. So if X defaults, then I am supposed to pay. If X did not default, then I will not be paying. So this is nothing but kind of a contingent contract. So one of the example I have already given you, marine insurance, fire insurance. The third is guarantee contract. Now another example is, understand, if there is Mr. A, okay, there is Mr. A, Mr. B, okay. Now Mr. A said that on the death of B's father, A will give 50,000 or 1 lakh or 5 lakh to Mr. B. Okay, A is saying that on the death of B's father, A will pay 5 lakh rupees to Mr. B. So now, is it a contingent contract or not? This is the first question. Now understand, this is not a contingent contract. This is not a contingent contract. Why? Because death is going to happen today, maybe not tomorrow, but someday going to happen. So death is certain. Correct? Death is certain. So it is not a contingent contract. For contingent contract, there should be an uncertain event. Uncertain event is nothing but what? Either X, Y, in this example, X, he may default or he may not. This is uncertain. Or marine insurance, ship may arrive or ship may not arrive. So this is also uncertain. So there should be uncertain event. Then only you can say it as a contingent contract. The another example of this also, death is certain. So please understand, death, if you are making any contract about on the death of someone, it's a certain event. So that contract is not considered as a contingent contract. But more, what I can say, more expanding this example, I am giving you another example, the similar example, that X will pay to B, but not on the death, but A promises to B that on the death of the father of B, if B's father keep 1 lakh rupees, then B will pay to the A. I'm just changing a bit more of what you can say, the characters, or I would say, on the death of the B's father, B will pay to Mr. A. Okay. Now the second example, on the death of B's father, B will pay, if B's father keep 5 lakh rupees, then B will pay this amount to A. Now you will say, ma'am, death is going to happen, so this is also not a contingent contract, but this is a contingent contract. Now understand the difference. In first scenario, death was certain. The contract was on the death of the father. Now here, the contract is not on the death of the father. Here the contract is on the if fathers keep 5 lakh rupees on his death, that means whether he keep the money or not, that's the uncertain event. Okay, so that's why it's a contingent contract. So understand, contingent contract, there has to be uncertain event. So in this situation, on the death of B's father, B will pay to the A. This is uncertain, and that's why this is a contingent contract. I hope you understood the difference between the two examples. I'll give you another last example so that it will be very clear in your mind what is contingent contract and what is not. You may get a question, case study based question in your exam. Let's take an example like in case of corona, you already know that all the doctors were treating in the hospitals very seriously, correct? So here we have a doctor, okay? Assume that he is a doctor. Here he is having his stethoscope, okay? Here he is a doctor. Now this doctor, this hospital, city hospital, usually we always see city hospital in all the movies and everything. So city hospital. So city hospital approached Dr. Sharma that Mr. Dr. Sharma that please treat our patients. These are the corona patients, and you will get your service fees or the professional fees. Now Mr. Sharma is very worried that he may suffer from corona because of these patients. So what happens is, city hospital make a contract with Mr. Sharma that if you suffered from corona in next 3 months or while treating our patient, you will get 10 lakh rupees as a compensation. So now it is also contingent contract, because whether Mr. Sharma will suffer from corona or not, this is uncertain. So this is nothing but the basic, what you can say, basic concept of contingent contract. There should be a certain event, then uncertain event. The second thing, after uncertain event, the second thing, there should be a collateral to something, to do something or not to do something, but there should be some collateral event on which your contract is depend upon. Okay, so this is basically about section number 31. Now collateral means what? Collateral, where you can say there neither promise directly promise as a part of a contract, nor the whole of the consideration of a promise. This is given by Pollock and Mola. Understand? I'll explain, don't worry. Let's take an example that you have taken a fire insurance for your godown. If your godown set up with a fire, you will get rupees 10 lakh from insurance company. Now collateral event is setting up a fire, correct? Now you are not going to set a fire, or you will not try to destroy entire your godown. So this is nothing but what? You are not going to perform that collateral event. That collateral event may happen or may not happen. There is no consideration involved in that, but your contract is dependent on that collateral event. This is nothing but the collateral event one-liner or basic. The next is what are the rules or the essentials of a contingent contract given under section 32, from 32 to 36. So 31 to 36, it's all about contingent contract. So let's discuss about the section number 32. First of all, the contingent contract, the contract which depend upon happening of something, is section 32. Not happening of something, section number 33. So happening is section 32, not happening is section number 33. Happening of certain event, that means what? These kinds of contract cannot be enforced by law unless and until such event has happened. Otherwise, that means if that event is not happening, you cannot enforce the contract. If that event happens, then you may enforce the contract. I'll give the example for everything, but I'm just telling you what are the essentials for first heads. Depends upon not happening of something. That means what? These kinds of contract can be enforced when the event becomes not possible before the due date or something like that. That means these type of contract are depending upon not happening of certain event. So one is happening of certain event, the another is not happening of certain event. Section 35 talks about happening and not happening together, but with the fixed time. So here time restrictions are there. So here we discuss about the time. Then section 34 is about the living person, conduct of the living person. Section 36 is all about impossible events. Now one by one we'll discuss everything with the example. Now first section number 32 on happening of certain events. For example, if you have there is assume Mr. A is there, Mr. B is there, okay, and Mr. C is there. A promises to Mr. B that if C died, then and B is alive, B will get C's horse. B will get C's horse. Okay. B is going to get what? C's horse. Okay. Now this is the contingency. Why? You will say, ma'am, death is as it is again a certain event. How it will be a contingent contract? Now understand. The condition is that C should be dead. C should die. C should die. The condition is that C should die before B. Okay. So this is the uncertain event, that B should be alive and C should be dead. Now this is uncertain event, and that's why you can say that on happening of certain event, that means on the happening of the death of C, B will get something. This is nothing but happening of certain event. This is nothing but section number 32. Now in this situation, if by mistake B is dead now, okay, and C is still alive, then this contract will become void contract. So this is nothing but what? Section number 32. Now we'll discuss about section number 33, that means not happening of certain event. Let's take example of marine insurance. If your ship did not arrive, you will get 10 lakh rupees as an insurance from an insurance company. This is nothing but what? Insurance. Marine insurance of not arriving of a ship is nothing but not happening of certain event. That means obviously your ship is not happening, means your ship may sunk in the water or ocean. That means your ship is not going to come. It is impossible that ship will arrive. That means you can enforce only if not on the basis of not happening of that event, and that event becomes impossible. Now the next is happening or not happening of certain events within a fixed period of time. Now understand here section number 35. I'll give you the example. So here one of the business person, he is one of the business person for his business, this is his business. Assume that this is his business. For his business, he is taking insurance. Okay, he is taking insurance from a marine insurance for his company, and here we have lots of goods in this. Okay, there are lots of goods and insurance company, and there is a contract between one of the company or any of the person and with the insurance company. Now what happens is, first of all, if the ship is coming within a year, then this person will get money. This is nothing but what? Within 1 year, obviously within 1 year is a fixed time. Okay, so on happening of certain event within a fixed period of time, you will get something. So collateral is what? On happening of certain event, but that happening of certain event should be within the specified time, fixed time. So this is nothing but first example. In this situation, assume if the ship did not arise, if the ship did not arrive, okay, ship did not arrive, then what will happen? The contract will become void contract. If ship did not have, why? Because your contract was on the happening of certain event within the fixed period of time. So if that event is not going to happen, that contract will become void. And the second is what? On the not happening of certain event within the fixed period of time, section 35. That means what? If the ship is not coming within a year, we'll pay you. This is nothing but what? Not happening, but that too within a year. They are what you can say, they are including certain restrictions in your contract of time restrictions, specifically within a 1 year. So if that did not come, then you will get some money. So this is all about the section number 32, 33 and 35. Now let's discuss about section number 34. Now this section number 34 is all about the future event of living person. Now understand future events of living person. That means let's take an example that here we have Mr. A, okay, and Mr. A is going to marry with his dream girl. Maybe we'll take the example of Katrina Kaif. Okay, dream girl is Katrina Kaif. Now what happens is A want to marry with Katrina Kaif, and B said A that if he marry to Katrina Kaif, that means his dream girl, then he will pay him 10 lakh rupees. So he is going to pay how much money? 10 lakh rupees to Mr. A on the marriage with Katrina Kaif. But Katrina Kaif married with Vicky Kaushal. Now, obviously, because of the conduct of the living person is nothing but the natural person. Because of the conduct of the natural person, it is not possible to perform this contract, so it becomes void. But this is there is a contingency that if they get divorced, then A may get married again with the Katrina Kaif. So this is nothing but a living of future conduct of the living person. And impossible event is nothing but section number 36. These are the kinds of contract where you can say that not going to happen kind of a contract. So if two parallel line meets, I'll pay you 1 lakh rupees. This is kind of contracts are contingent contract, but obviously understand these are the contracts which basically kind of a void agreement itself. But yes, there are certain impossible events as well. So yes, so we are done with the section number 31, 32, 33, 34 and 35, 36. Last one line, you understand that contingent event should not be mere the will of the promisor. There should be will plus uncertain event, then only it will be a contingent contract. Death is not a uncertain event, it's a certain event. Please understand or write in your notes again. So this is all about the section number 31. In your exam, you may get a 5 mark or 6 marks of question, straightforward question. Explain what is contingent contract, explain this definition and explain the rules. You can give these examples only, whatever I have said just now, you can give these examples only in your exam and you will get the marks. The second type of contract is quasi contract. Quasi contract is something where this contract is not rights and obligation is not created by the parties but created by the law. Okay, so basically no man can enrich himself at the cost of others. What we discussed, kind of a quantum merit, what we discussed, that you cannot enrich yourself at the cost of others. So similarly here, but in that quantum merit was the remedy, and here we are discussing the quasi contract, in which it is kind of contract where parties are not entering into a contract. In quantum merit, parties were entering into a contract. Okay, here parties are not entering into a contract. Because of law, your contract is there, you have a rights and obligation. In this we have 5 situations where we can say that there is a quasi contract. First situation is claim for necessaries for incapable person given under section number 68. This is very, very, very important. Here I have specifically mentioned incapable person also and minor also. Why? Because in students' mind, they usually write the claim for necessaries supplied for a minor, and they write in the bracket section number 68 and they write all the answer. Please understand that section 68 talks about incapable person. Incapable means minor also, incapable means unsound people also. whatever is included in section number 11, all those people are incapable people, and if you are providing any necessary to them, obviously we are already aware that whatever the necessary we are paying to the incapable person, you get the, because that incapable person you are providing necessary, that person's personal property you can use, and you can get your money back. So basically, if you are paying anything for if you are providing any necessary or supply any necessary things to a minor, you will get money for that, against that, even though you are contracting with the minor, but still, because it's a necessary, you will get money against that from the personal property of that minor or the incapable person. So here law, because law is not here, the contracting parties, there is no contract, because incapable person cannot enter into a contract, minor cannot enter into a contract. But understand, here in this situation, because it's a quasi contract, it is created by law, even though as a parties we are not entering into a contract, but yes, because it's a it's a quasi contract created by law, it is a quasi contract created by law, and you supposed to fulfill all the obligation under this contract. So but understand, necessary should be suited for his life conditions, and the second is reimbursed from the property of the incapable person. The second situation is payment by the interested person, section number 69. Understand this section, this is quite important from your examination perspective also, section 69. This question is there in your RTP also, I guess so. So understand section number 69. Let's take an example that here Mr. B is there, here Mr. A, okay. A is zamindar, you understand zamindar, I guess. Here A is zamindar, B having his land, okay. B is having his land. Now zamindar is giving his land to A for using purpose, and then he will get some lease or rent, whatever. A, because he is a zamindar, is supposed to pay tax, or the, you can say, revenue to government, correct? Because A did not pay to the government, government advertises that this land is for sale, Now understand what happens. B just saw that advertisement, and B can see that now if A did not pay to government, obviously B will not get this land, and then whosoever will be the next owner, he may or may not allow him to use this. So what B did, B go to the government and be paid on behalf of A, that revenue or the tax, whatever the tax was there, A paid on behalf of B paid on behalf of A. Now it's obligation, because there was no contract between the B government, because B paid, A and B get into a contract, and there is a contract created by law that B will get, or A should reimburse the amount of tax to Mr. B. So this is nothing but what? Payment by the interested person. Interested means interested in that property. The next is, the third is obligation of the person enjoying the benefits of the non-gratuitous act given under section number 70. Non-gratuitous means with no voluntary acts. So if any of the person obligation of the person enjoying benefits of non-gratuitous act given under section number 70. Now understand, 3 lines are very important. Where a person lawfully does anything, first of all, you should be lawfully doing something for another person, or delivers anything to him, not intending so gratuitously, that means you are not providing what you can say, voluntary services, you are not doing any charity, and such person enjoy the benefit from it, then in that situation that other person should compensate to you. That means if you are doing any non-charitable purpose kind of a thing, you should get the money for that. The next is very important, responsibility of the finder of the goods given under section number 71. In these 3 lines are very important. You're supposed to mention only these 3 keywords. First of all, as a finder of the goods, you should take the proper care of that property as a man of ordinary prudence. The second is, you should not appropriate the goods. You should not appropriate means you should not do any kind of a stuff to this. That means if you get this bottle, okay, and what you do is you just cut this bottle, or you just throw this, and then you are you are saying that you are a finder of the goods and you haven't appropriated the goods, then it's wrong. Appropriate the good, you should not appropriate the goods means in whatever condition you are getting that goods, you should again give it back to the true owner. And the last is restore the goods if you if you find the owner of that goods. That means if you get any lost wallet, correct, then you try to find the owner of the goods, you try to find the true owner of the goods, and then you should restore them back. That means you should give them back that wallet. You should not be doing like you just keep the money in your pocket and giving the empty wallet to the owner of the goods. You shouldn't be doing that. This is nothing but a responsibility of the finder of the goods. And the last is money paid by mistake or under the coercion. Obviously, if you transfer any money by mistake to somebody, then obviously you should get it back, or it must be repaid, even though there is no contract between you and that stranger, but still it's his duty, or because of quasi contract, that stranger person should must return or repay your amount. This is nothing but section number 72. These are the 5 situations where you can apply quasi contract. There are 2 difference points also, differentiation between the quasi contract versus normal contract, and the second word differentiation is quasi versus wagering contract. They are quite important, specifically wagering and contingent. Just go through all the points once so that this much is sufficient from your examination perspective for revision session. This is all about the unit number 6. So we'll meet tomorrow, or not tomorrow, we'll meet in the next session. Till then, take care, bye bye. Please keep revising. All the best.